Here are two indicators we previously reviewed, combined in a trend-following and reversal strategy. We'll cover everything you need to know, from entry rules to risk management. Let's dive in. Bin-based support and resistance created by Steves analyzes support and resistance through statistical binning methodology. It divides the price range between highest and lowest points into 10 equal bins, calculating average price within each bin to establish support and resistance zones. The indicator calculates averages within each bin to identify recurring price levels, where market participants tend to make decisions. This approach processes the entire price action data set rather than isolating extremes, creating a more complete view of market structure. The visualization uses gradient-colored lines representing each level's relative strength. It calculates percentage success rates for both support and resistance functions, giving traders data to assess level reliability. The backtest methodology looks for bullish and bearish rejections at each level across the defined look-back period, measuring how often price respects these boundaries. Users can identify closely positioned SR lines that reveal consolidation zones, areas where price tends to accumulate before making directional moves. These clusters serve as decision points for traders awaiting breakouts. The indicator includes customization options, adjustable look-back periods, offset settings for projecting lines forward, and 3 display modes for backtesting statistics: on lines, in table format, or hidden. Created by Zierman, this Pine script indicator applies machine learning principles to momentum analysis through a k-nearest neighbors (KNN) algorithm. The MLMI combines traditional technical indicators RSI and WMA with machine learning to create a predictive model. The indicator visualizes its predictions through a main line with a corresponding moving average, both displayed against a gradient background that highlights overbought and oversold zones. The zero line serves as the neutral reference point for momentum direction. Traders can employ this indicator for identifying potential reversals when the MLMI approaches extreme levels, particularly when crossing back from overbought or oversold territories. The crossovers between the MLMI and its moving average provide additional trading signals, with confirmation possible through the mid-level zero-line crossovers. In a trend-following context, the goal is to align with sustained directional movement while minimizing exposure to temporary pullbacks or consolidations. This strategy begins by using MLMI to confirm momentum alignment. The key condition for a valid setup is for MLMI to be above its signal line and moving above the zero level in an uptrend, or below both in a downtrend. Entry is considered when price either breaks above a previously tested resistance level or pulls back into a bin-identified support zone that held during prior tests. Ideally, this occurs while MLMI shows increasing momentum in the trend direction. For long trades, price should be holding above or reclaiming a BIN support zone. A common setup is a pullback into support, where price consolidates or forms a small rejection wick, followed by a bullish candle close, while MLMI maintains a strong upward slope. For short trades, the same applies in reverse. Look for price pulling back into a resistance zone or breaking down from it, with MLMI sloping downward and remaining below zero. The stop loss is placed just beyond the invalidation point, slightly below support for long trades, above resistance for shorts. Targets are set at the next bin level, or partial exits can be taken as price approaches these zones. If MLMI starts to flatten or cross against the trade direction, it may be a signal to scale out or exit completely. In trend continuation setups, it's also helpful to monitor how price behaves at the intermediate bin zones. Clean breaks and retests can offer secondary entries. The combination of structural confirmation and consistent momentum filters out weak continuation attempts. If you want a complete trading system with full customization so you don't have to jump between tools, Quantum Ribbon Pro was built for that. Link in the description. Let's continue. For reversal trades, the emphasis shifts toward identifying exhaustion near historically significant zones, followed by confirmation of momentum weakening. The initial condition is price approaching a BIN level that has repeatedly acted as support or resistance, particularly if backtesting data shows a high rate of rejections at that zone. Entry should not be based on structure alone. Wait for MLMI to diverge or begin turning against the previous momentum direction. This could be a crossover of MLMI and its signal line, or a reversal back from the overbought or oversold regions. In strong reversal setups, MLMI may also fail to confirm a new price high or low, classic divergence. For bearish reversals, look for price testing a resistance level and failing to close above it, while MLMI starts to curl down from elevated levels. A bearish candle formation, like a pin bar or engulfing bar, strengthens the case. For bullish reversals, price tests a bin support level, fails to break lower, and MLMI shifts upward. A strong bullish close can trigger the entry. Stop loss is placed beyond the structural level, above resistance or below support. The initial target is the next bin level, but if momentum accelerates, the position can be managed further using MLMI as a trailing condition. Reversal setups are best avoided in the middle of a range or near recently broken levels. They work more reliably at the edges of price structure, where repeated rejections have occurred, and momentum confirms the shift. In our previous video, we reviewed and ranked 5 advanced TradingView indicators. Strategies for those are coming soon, so be sure to check it out.